Yeah, absolutely. And I think all of us are going to the drawing board and thinking whether we need that extra car, the extra driver that we've been hiring on a monthly basis or not. It's literally just come to that. So significant demand crunch, that's where the economy is headed in for. There's no denying that. So on last count, we've fallen quite a fair bit today. 89.28 is where we are at. 200 points gone. 16 stocks within the FRE universe, only to the green. Rest all bleeding in the red as we speak. Financials, of course, getting clobbered. Bank Nifty now down 5% on the futures. Let's also welcome on board on that note Ramesh Iyer, Vice Chairman and MD at Mahindra Finance, joining in on the show right now. Ramesh, hi, good morning. Good to have you on the show. Just looking at the numbers, you reported a profit degrowth of a good 62% on an annual basis. And as I see, that's largely because of high COVID-related provisioning. Can you quantify the loss of business in the last 15 days of the month of March because of the lockdown? And how is it that the collection efficiency is looking for the months of April as well as May?
So I would rather look at this into two parts. One is the March, number of days that was lost, almost 2 weeks or so. And that would mean a substantial business volume loss during March because normally March is a big month, and with BS6 which was to come in, the BS4 retails would have been much higher. So we would put that number to be, we would have lost at least about 35,000 vehicle sale loss. When I say vehicle, includes tractors, pre-owned vehicle, all kind of products put together. We would have lost about 35,000 odd vehicle lower numbers for March itself. Same is true when it comes to collections as well in March. Right? Normally, if you see historically our book, the fourth quarter is one of our best quarters. And within fourth quarter, March always stands out to be very, very large, where in fact reversal of NPAs happen because a lot of government bills get settled, contractor settlement happens, consumers come and pay off and close their book accounts during that period. And suddenly, you come to a situation where you are not able to do any of these activities for the 15 days time. So I would think our gross NPA would have been at least, if not more, 1.5% lower than where we closed if this was not to happen. That's a March story. But then you look at April, I think it's 1 month to talk about where the total lockdown in April and virtually no business. And collections, though, were at about 15% as collection efficiency, but they were mostly from customers who mandated the ECH payments, etc. And they are all maybe some kind of local professionals like teachers, doctors, lawyers at local level. So the real customer who uses the vehicle, put to use, earns out of the vehicle and then repays, definitely got into a situation where they could not repay. So I would think that April was one of the toughest months for the customers as well as therefore for the credit providers. May seems to be definitely improving because the farm cash flow has come in, and we do see the collection efficiency for the first 15 days is almost as high as what was for the whole of April. So I would think May would register a much higher collection efficiency as we close the month.
Efficiency better in the last 15 days of May. So could it be a Q1 will be better than Q4?
One is, of course, RBI has given moratorium, which has been passed on to the consumer, so which stays up to May. So out of the 3 months of the first quarter, that is April, May and June, 2 months the customer gets moratorium, the accounts are frozen. So, it's more a situation of no collection, but at the same time, there will be no built-up of overdue because of the moratorium. The real question is that do we see customers starts to repay as June opens up? And I think my view on this has always been that, even if we were all to believe by end of May, most of the locations starts to operate. But by the time the customers come back, they, get back to business, by the time they start getting some volumes, by the time they start earning, and some of them or some, must have even taken some kind of a small hand loan for their day-to-day living, if they are all daily earners from the vehicles and tractors. So I think one should give at least another quarter before we can say that if May end things were to regularize, when will the consumer start to regularize themselves, I would say another quarter from there. So my understanding is that post-August, September is what we will start seeing things to become little more normal if May end many of the locations and many of the activities recommence.
Now almost everyone is feeling the heat of what is happening on the liquidity. What has been your experience with LTRO2, and at the current environment, how are spreads and liquidity situation looking?
So for someone like us with a good rating, good track record, good promoter, I think liquidity has not been a challenge for sure. We were able to raise sufficient funds even under the TLTRO route. We have raised about 675 crores, in that one particular period of time, as well as we've been able to source term loans. We have securitized some portfolio. Our retail deposits are doing well. So I think so far as liquidity is concerned, that's not been our major concern per se. Clearly, we are very comfortable to make a statement that we are be able to discharge all liability, including servicing of interest and meeting of fixed cost, even if things were to continue in the same manner even post-September. So that's not our area of concern, and I think we have a liquid cash of close to about 4,000 odd crores from our various sources, which would be put to use as things open up.
Okay, almost 75% of borrowers have opted for the moratorium. So where's the majority of the stress coming from? Would it be particular segments, geographies that are seeing higher stress?
No, so far the NPA out of moratorium would not be there. So the NPA that you see now are the ones which were already 90 days past due as of March, and those customers definitely have not been given a moratorium. And we have actually seen an improvement, and as you've seen, we have also taken a little aggressive provisioning and kept the net NPA levels at 5.9 levels, almost around the same that we had 1 year back, 5.4 we had. So I think that's again not a real worrying feature. As I just explained a little earlier, the challenge is going to be if the moratorium is restricted just to May, and if there are no further extensions given to the consumer, they will start to become some kind of an NPA post-August, right? Because up to May, we have frozen the installment. Then you say June, July, August is where the 3 installments will start to build. So post-August, if they still are not regularized or not in a position to come back to repay, will they start becoming NPA of a time? So one of the requests that the industry has also made to regulator is, instead of moratorium, can they consider agreeing for a reschedulement so that all of us can reach out to our customer and on a need base, we can decide who needs to get what kind of a time, rather than giving everybody a blanket 90-day or a 120-day.
There has been a lot of concern about population and moving back to rural areas. Talk to us about how this impacts your business, and also on the other hand, what kind of demand that you're anticipating, from various segments, particularly tractors, pre-owned segments. Would those be more likely to work better?
April, May is not really a month to talk about disbursement because things are just about settling down, and hopefully from June things will open up. And as I said a little earlier, I would very strongly think that tractor demand surely is up, and that would add to some volume. So far as the vehicle demand is concerned, it could take little longer, and therefore it would happen only post-August, September types. While some small numbers may happen, but the real pickup one can see only post-August. Pre-owned vehicle demand, I believe, is surely and likely to go up because people may want to have own vehicle instead of traveling in some kind of a shared vehicle or a public transport, and may not want to really own a new vehicle because they don't know how long can this be practiced. So they may look at a small pre-owned car at a low price. So I would think that pre-owned demand is likely to go up very quickly. So the growth for us would come from tractors, would come from pickup kind of vehicle which are for goods transportation locally, which will be very required, the small three-wheeler for goods transportation, and pre-owned vehicle. From the new vehicle segment, we would think it will take a couple of more months before the numbers can start to happen. More importantly, they may be around the festival season where you can see traction there.
All right, we leave it there. Thanks so much for joining us and talking us through that, Mr. Iyer. Good chatting with you. We need to take a very quick break. Back in just a minute.